Hello, everyone. Welcome to another episode of Test, Optimize, and Scale. Excited to have Marty Tate here with us today. On the legal side, thought leader in the world of regulated investment crowdfunding. Also corporate finance, securities, DeFi, blockchain, fintech, all on top of different types of crowdfunding around capital formation. So going to be giving tips on compliance, what to do to get your campaign set up the right way. And Marty's been involved in the industry for a long time. We were on a panel together years back. Marty, thanks for taking the time to hop on the pod here.
Yeah, absolute pleasure to be here.
And just to familiarize listeners a bit, what's your background? How did you get involved in this world of investor acquisition, regulated investment crowdfunding? How did you get brought into the space?
Yeah, so I was brought into the space. So I right out of law school, I started practicing corporate finance and securities on both the public and private side. In around 2009, so pre-Jobs Act, I had a client that contacted me and they wanted to do peer-to-peer lending, peer-to-peer payday lending. So they wanted to basically enable, one person to lend to another person on kind of a payday type loan. So quick loans. There wasn't Jobs Act. There wasn't crowdfunding per se at all. There was a couple of companies that were in this space and were doing peer-to-peer lending. And they were doing that basically as a public offering that was being updated on a daily basis. So filing of an S1, public thing. So we started down that path, and it was during that time that I got introduced to some of the folks that were working on the Jobs Act, people like David Wield. And so got involved in that, was involved in the process of the Jobs Act, wrote a lot of commentary and in input when that was in the process. And then when it was passed, tried to weigh in as heavily as I could on the regulations. And since that time, started speaking at conferences and kind of all over the place. And really from there, just the corporate finance, private and public finance career that I had sort of veered in this direction of equity crowdfunding. And since that time, I've worked with, major crowdfunding portals and platforms. I've worked with issuers, service providers, in just about every area of that, from, Reg CF. I helped a lot of the intermediaries become licensed with FINRA. We've worked with issuers to launch doing Reg CF and Reg A, as well as Reg Ds. And we've, like I said, we've also worked with a lot of the broker dealers and platforms that are in this space, advising them as well. So that's kind of a background on how I got involved in that. In 2017, probably, I was attending a crowdfunding conference in LA. And the big word was crypto. Everybody started saying, all of the crowdfunding questions started becoming crypto questions. And that conference, as well as my practice, evolved into sort of the crypto space, where it was really heavy in that for a number of years. Everybody wanted to do an ICO. They saw it as a quick way to raise capital. So we focused a lot on that and spent a lot of time trying to talk people out of doing that. And, but obviously still doing regulated crowdfunding, trying to push people as much as we could towards that. So anyway, that's a long, winding background of kind of how we got here.
I felt like I was along the path with you, from corporate to P2P, early days, Jobs Act. We actually got involved in crypto at the same time, probably around the same conferences, Crowd Invest Summit and Crypto Invest Summit in Los Angeles, what I'm guessing. But right there in 2017, I'm using different crowd sale formats. I use the
Yep.
term ICO less these days, but
Yeah.
call
Yeah.
private and public sales there and some of the marketing initiatives behind it. So fascinating to me that you actually work with the portals, the intermediaries to get everything set up with FINRA and make sure they're operating correctly, as well as the issuers and filing their Form C, their Form 1A, Reg D 506C. What does that process look like? For anyone who's tuned in, considering going down this road, what type of timelines, what types of considerations should be taken into account?
So it really just, the typical lawyer answer, but it depends. So
Yeah.
if people are going into it and they said, hey, we want to step into this, that there's kind of a roadmap that you can establish, right? If you want to do a Reg D offering and just a 506C offered to just accredited investors, that's kind of your quickest, easiest way to get there. In that you can immediately start, if you create a website, you can start advertising and marketing to those accredited investors. Reg CF um, allows you to raise up to $5 million from accredited and non-accredited investors. You have to go through a funding portal or a broker dealer. And you have to file what's called a Form C with the SEC. So that can take a few weeks to a few months, but depending on kind of where the company's at, and how much they want to raise. The amount that they're raising actually dictates what they need to provide as far as financial statements, whether those need to be just, certified by the CFO of the company, reviewed or audited. Um, so that can take, like I said, anywhere from 2 weeks to 2 months, maybe. Um, and if people are successful in that, then we a lot of times will parlay that into or carry that into a Reg A offering, which allows them to raise up to $75 million. It doesn't need to be 75, but that's the maximum. Again, from accredited and non-accredited investors. That takes longer. That can take 3 to 6 months because you have to go through a review process with the SEC where they, submit it to them and they'll ask questions, and ultimately, once everything's approved, they'll qualify the offering and you can go out and start selling. So, um, the process really depends on where the company's at, how much they're raising, how they want to raise it, and what exemption they use. And all along, you're working with the accountants, you're working with the a platform or broker dealer that might be helping you launch that. And if they're smart, they're working with somebody like DNA to help them um, market and help them. Because we've talked about this before. You said we've spoken on panels before, and the legal part is, although there's complications and there's things you've got to work through, there's a bunch of silos of regulations and areas of law that you've got to comply with. It is we can get there. We can, we've worked with some pretty complex structures, and we can get you there. But ultimately, you've got to be able to sell it. So marketing is we tell people all the time, like, this is a marketing play. You're not just going to put it up there and people are going to find you and immediately invest. So it's got to be something that all along you've got to think, how are we going to market this? How are we going to sell this? What does our network look like? How are we going to reach more people? Are we going to advertise? How are we going to advertise? Just all of those things. So, um, yeah, that's kind of the timing and process on that.
All with the good foundation, of course.
Yeah.
The compliance has to be there and from the get-go. And I've seen groups with longer delays because they didn't do it right the first time. Been brought into conversations on the accounting side around valuation and share price. And again, it has to appeal to that end audience, those target investors that you're going after. I would add that I use a similar answer of a few weeks to a few months. Reg CF, Reg D being quicker, Regulation A plus 3 to 6 months. Although I've seen well over a year
Oh,
and
yeah.
a half with delays there. And you could take advantage of that time if you're marketing, if you're audience building compliantly. There's rules around, priming, there's test the waters and taking in reservations. But I see it as a lost opportunity when I speak to a group and they want to work with us on a Regulation A Plus marketing campaign. And then we don't hear from them again a year and a half later until a year and a half later and they're ready to go live.
Yeah. And you're right. They can take, depending on how complex the offering is or novel, um, or like you said, where the company's at.
Yeah.
If the company's, is not in a good place from a, legal, corporate, organizational standpoint, or from a financial standpoint, with their, where are their financial statements and um, how well is their accounting been done? That can, you can get, death by 1,000 comments, if those things aren't in line. So the SEC, like we've had, you know, especially going back to sort of the crypto days when we were first trying to run, we're trying to do crypto, we're trying to do tokenized launches
Yep.
using Reg A. And, I wasn't unique in this. There were several of us attorneys that had those live before the SEC. And it was, like I said, it was just one comment letter after another. Like, how are you going to do this? How are you going to do that? Because the SEC hadn't caught up to the technology and the laws definitely weren't there. And there were just so many questions that most of those issuers at that time gave up. There's been a bunch that have been approved since then. But so yeah, it can, like I said, I always try to be optimistic and say, hey, 3 to 6 months. But yeah, we've definitely
Yeah.
had those that have lasted over a year.
I remember those days, the tokenized Regulation A Plus campaigns, and around 2018, May,
Yeah.
that summer, everyone was telling me they were going to do them when I went to a Web3 conference.
Yeah.
And I remember when those first two were pushed through, but it's definitely a hurry up and wait scenario. And I like how you pointed out that this is a marketing exercise. It's definitely a collaborative, and there's many pieces to the puzzle that have to go right. But I analyze the market for Reg CF every week. I look at the annual reports, the quarterly, monthly. In addition to that, I know in 2024, there's about 1,408 Reg CFs, far fewer, about 40-ish Regulation A Plus campaigns. This year, there's over 70. But on Reg CF, a lot more data, a lot more depth.
Mhm.
And it appeared that half the issuers didn't raise over 114K, even though they could go up to 5 million, given
Yeah.
some are smaller rounds, 50K, 300K, maybe a mom and pops. There's this story of the pizzeria and they need a new
Sure.
wood fire oven. So not everyone's going for the 5 million. And a lot of groups look to hit 1.235, about $1 million in the quarter before they have to do audited
Mhm.
financials. So, preliminary goal. But to see half the issuers get stuck under 114K, and then really only the top 7% hitting $1 million or more, was
Yeah.
very eye-opening to me. There was 5 deals that hit 4.8 million or more. A few more this year, and happy to say we've worked with some of those. Happy to say we've worked with many that are over the 7-figure level. But I do believe there's some misconceptions in this space, and I really look to emphasize, you need to figure out your traffic sources. You need to determine, hey, how am I going to get enough people there? If it's a $1,500 average investment, which was the average for HCF last year, be a little bit higher this year, I believe. And, I need to get to 1.5 million. I probably need 1,000 investments, maybe 50,000 visits to the offering page.
Yeah.
And I find not all founders, not all marketing teams are really putting pen to paper to determine how that's going to take place. So I'm always looking to get that message, give different recommendations out there. I know you tell your clients, hey, really, put the right steps towards marketing ahead of time. Do you find
Yeah.
that to be a common misconception when you're
Yeah.
speaking? Yeah.
It's not only the right steps, but unfortunately, what it is it's also dollars, right? You've
Yeah.
got to put money towards it. Our fees can be pretty fixed, but we typically say, yeah, whatever you're spending on legal, you'll need to spend at least that on marketing.
As a starting
Um,
point, yeah.
Yeah, as a starting point, usually more. But one of the things that was interesting you're saying is that you know, the success, right? You can raise up to $5 million. Or a lot of people will set a lower initial bar so they can avoid audited financials. Um, but um it really becomes like you said, you have to think about it in a strategic way. And there's no real rhyme or reason. Initially, like the things that were really successful were sort of the shiny objects, right? It was like it was a consumer product. It was something that people could kind of get their head around. That's where you had a lot of excitement. In not necessarily Reg CF, but the Reg A, it was real estate. People could touch and feel real estate. They could be like, okay, I get that. It's an apartment building in San Jose, California. I get that. Um, Whereas you had other companies that, and then you also saw a lot of success in sort of like you said, the mom and pop pizzeria, the local store that's doing a campaign, and people they already have that customer. There's that hometown feel, like, hey, I want to support the neighborhood company. So you would see success there, not at the $5 million level, but maybe at like the 250 or 500,000, whatever it was.
Oh yeah.
So, um, where in the meantime, you had a lot of companies that actually, probably had much better ideas as far as the scalability and probably represented better investments. But they didn't have that sizzle to them. It's a biotech company. Might be a software company. It might be some sort of medical device company. And those struggle because it's harder to get your head around them as an
Mhm.
investor. Like, let me understand how this works. But B, they don't have that natural audience. If you're I'm using a few examples of companies that we've worked with. If you're like a med tech company, um, you don't really have an audience, right? You don't have somebody, this is like, these are our customers, your customers are going to be hospitals. Um, so those become really difficult raises. And so those take a lot more thought in, hey, how are we going to launch? Who is the audience? Who understands this? Is it people in the it's going to be people in the medical field. It's going to be um, maybe we have to target towards doctors and clinicians that are in these areas that can actually understand it and understand, the growth potential. Um, so then you have to ask the question, well, how do we target those guys? How do we reach those groups? So I think that there's a lot more nuance to that sort of marketing piece that people miss. If it's like I said, if it's a local barbecue, um, your audience, you're probably not going to get a broad nationwide audience, but people locally might, understand. But you're also probably not going to raise $5 million. You're going to raise a couple 100,000 or 500,000, maybe a million.
Yeah. And whether it's a $200,000, $500,000 local business, small business, early stage round, or whether it's a 5 million, we've worked on a couple that have surpassed 50 million this year on the Regulation A plus side,
Yeah.
various other ones in the 8-figure range on Regulation A plus. I feel it's social dynamics at play on these campaigns. And
Yeah.
like you said, a retail investor may not understand, uh, a med tech product. It may go over their head a little bit. But if it's on WeFunder, if it's on Start Engine, and every time that prospective investor gets to that offering page, there's more raised and more
Yeah.
testimonials and more
Yep.
publishers pointing to that. If every time they go online, they see an advertisement and with a meaningful announcement, not just,
Mhm.
okay, I keep seeing the same ad. If it feels like there's a line around the block versus an empty restaurant sensation,
Mhm.
when they
Mhm.
get to the deal, that there is that psychological effect. And I said the top 7%, $1 million or more, I'd point out to prospective issuers, the top 10% really get all of the investments. You have to really go at your first degree network, second degree network. You pose the point of, hey, what if it's a med tech company? They have no social audience, they have no email subscriber base. Maybe they are able to go at their first degree network offline, phone calls, seeing people at events, have some foundation, in the early stages, or first week, first month of the campaign, that are able to validate the deal to an extent. Also in a Reg CF, minimum investment maybe $500 on a med tech deal. I've seen them as low as 100, could be 1,000 potentially, but if I had a friend who was launching a new piece of equipment, new company, I believed in him, I understood his background, I'd put in the minimum, right? Maybe
Yeah.
more, but minimum just to support, like, hey, this is what I, am expressing. I want to be part of this as you go from, 10, $20 million
Mhm.
valuation to 200, 2 billion. I want to be along for the ride there. So if you're able to, as a founder, to bring in, 100 people, average of $1,000, couple
Yeah.
$1,000 each, get to 100, 200K, that may be optimistic, that may require a lot of work. But like you said, some of these deals could seem, questionable if you're not familiar with the technology or the individuals involved.
Yeah. Yeah. Like I said, and what you actually brought up a really good sort of model and point there was as far as the founders, right? The founders, they have to do the work. That initial push has to come from that inner circle. And like you said, I think if you can see traction there, if people see movement, like, oh wow, these guys have already raised $100,000 right out of the gate. People are gonna feel it's that, FOMO, that they're like, oh shoot, what is this? I've got to know more about it. A lot of people are buying that. But that initial push comes from those people, having those people ready. And so the founders have to do a lot of work. And Reg CF's crowdfunding raises are they're a lot of work.
Yeah.
Um, it's not just, there's the legal side of it, which um, can be a lot of work, but there's a lot of work in marketing this thing and getting it to um, getting people to accept it. I do a lot, sort of the other half of my practice is I do a lot of fund formation work and working with funds. And, the question I get asked there, which I also get asked on the crowdfunding side, is, okay, can we do this? Can we do that? And a lot of times the answer is, yeah, you can do that. Or can we charge this? Can we charge that? And a lot of times the answer is yes, but will it sell?
Right.
Right. So you have to think, even with, a crowdfunding offering, how you price it, what you're offering, what your perks are, all those things kind of factor into selling the deal.
Mhm.
So if you go out and give yourself you're a brand new startup and you give yourself $100 million valuation, you say, hey, we're selling, you know, 10% of the company for $10 million or something. Or, some crazy valuation, people will say, hey, what do you think? And my advice was, well, if you can sell it, you've got to be able to justify it. So all of those things factor in. And I think they really factor into your having those initial conversations with that initial, that first group of investors who you want to come in and create that traction, create that movement. So all of those things, is that it's a lot of work, a lot to think about. Um, and it there's no reason why a campaign can't be successful, but it just takes a lot of work to get there.
Well said. And it goes back to the misconceptions a little bit. I don't know if it's sales reps at the portals or other service providers, and just
Yeah.
pointing at the case studies, just pointing at, hey, look at this big deal we just worked on. But a lot of the times I get the sense that many founders, many CEOs think it's very easy of, hey, we want to raise $5 million. We're going to use Reg CF. Do you think we need 2 months or do you think we need 3? I have to go back to the stats and say, hey, statistically, this is going to be tough. And, once we hit these milestones and we have traffic channels that are converting, we can look at a cost per acquisition of each investor from what we're spending on the advertising side. I can look at something that's more clear for you here. But until we get there, it's testing. We have assumptions. We need the data to show us what's working. One of the med tech deals we worked on recently, a company called Skinbit, a WeFunder,
Mm-hmm.
raised over $2 million, completed in October 2025 on the CF alone. They raised
Yeah.
more funds on the Reg D. And I like that approach for med tech, health tech, for many different verticals. So you can go after the doctors and medical
Yep.
professionals and people who really understand the vertical and at larger amounts and have them on your Reg D filing. You could have audiences going to the Reg CF as well too. Much more of a numbers game. You need a lot of volume there. And then platforms like WeFunder will allow you to showcase both as a total
Yeah.
amount. Do you like
Yeah.
that side-by-side approach? Is that something you guys encourage?
I think it's great. I think if you have that, and especially what that allows you to do too, is if you have, and you hit on a point that I'll get to, but
Please.
if you have those people that can come in, say there's somebody that can write a bigger check initially, and maybe, and maybe you haven't got you don't have your Form C quite ready, or even if you do, but somebody might want to come in and write a bigger check, or maybe because they're writing a bigger check, maybe they're coming in on a little bit different terms. Right? Maybe they're getting preferred stock versus a safe or some other or common stock. And one of the things that a lot of times that was frowned upon or people, the platforms tried to discourage that because they're like, no, we've got to have everybody in the CF. So you show numbers there. But then they started combining it, right? So they started showing this sort of the total raise is, hey, we've already raised $500,000. And that's just the number they see. And, turns out it was $400,000 that was by one investor under a Reg D, and then the other came in under a Reg CF. So again, that goes to that sort of marketing piece, right? People want to see like, oh, this is already traction. We've worked on deals where there's investors ready to write checks and, the platform says just everybody needs to hold off, and don't bring in these Reg D guys. Don't do anything until we launch because we want to show all of this as traction and for the offering. So those are, again, it's just all sort of little games that are played to visually to show that success, but they matter, right? It's
Optics,
all of that thing matters. Yeah.
and it's funny to me because I've seen products, brands, raises I thought would do extraordinarily well, but with little eyeballs with traction around it. I've seen others that are really moving, and those optics, they really do mean something. If you're driving audiences to a campaign page with 20K raised, or 55K, I think WeFunder will start promoting you over 50K. I think Start Engine it's over 125, 127K. Are you able to instill as much confidence in the eyes of a cold investor that you would be able to if it was a million 127K or even 555K? We look at these different levels where we're anticipating a higher conversion rate.
Sure.
So much of this is about that social proof and following digital marketing best practices.
Yeah. Yeah. And, one of the things, I mean, obviously, and we've talked about this is like a, industry professionals about the growth of crowdfunding and sort of year over year where it's gone. And obviously it has grown and, maybe it's not the like hockey stick, through the roof, but it's been successful, right? People have raised, billions of dollars using crowdfunding, regulation crowdfunding and through, across sort of Reg A, Reg 506C and Reg CF. The question that we talked about, when you and I last saw each other at the conference in DC, one of the questions that always comes up is that sort of like, there's a secondary market, there's that liquidity piece, and the success rate. And people keep coming back to, we're not going to see the sort of gas on the fire until you see like people having success, and not people being issuers, investors saying, I invested in this crowdfunding raise and and they did an IPO, they were sold, I made this much money. When you start hearing more of those stories, and that's still sort of the missing piece. I think people have raised a lot of money. I don't know how many people have, there have been success stories. I don't want to say there hasn't, because there's been numerous success stories, but I think we're still, once you start seeing that transition where this, company that did a Reg CF and a Reg A and then was sold or did an IPO and so forth, that's where I think you'll really see growth in this industry.
Investor success stories.
Yeah.
It's funny you mentioned, Web3. I remember Q4, was talked about quite a bit, the Thanksgiving table conversation, 2017. Bitcoin was getting up above 10K, 12K at that point. When I first got involved in August, it was around 2,700. So in that window of time, I feel like every day someone was telling me about Bitcoin, Ethereum, cryptocurrency, altcoins. Meanwhile, every day I was still explaining to people what Reg CF is. And to a large extent, it's similar today. And the liquidity is an obvious contrast. Now, mismanaged finances, perhaps. There was, Bitcoin holders and sellers driving Lamborghinis and spending, outlandish amounts. So, I mean, something could be said to that. But the liquidity was real. And even more so now, BTC, people bought then and sold over 100K, different type of story. There have been companies that have gone public. We've used Reg CF, Regulation 8+. We've worked groups at direct list through the Regulation 8+ campaign and the marketing from there. There have been groups that have gone under. A stat that was brought up at the conference, seems like about 10% of the Reg CF issuers have gone under since 2016, which, working in the startup space, is outstanding. You would anticipate almost a reverse, almost 90% going under in those windows of time. And then fortunate stat with, startups. But there seems to be more stability. People who could get through the filing are using that grit towards their growth. And there's been some exits. But to your statement there, as there are more investor success stories, as there's more liquidity in the market, as it's IPOs, exits, secondary marketplaces where investors are able to sell shares with an upside, I absolutely think there'll be more of a mainstream spotlight on the space.
Yeah.
So what recommendations do you have for founders that are watching, listening right now? What should they be putting into their notes day one in terms of how to run a successful campaign? You've worked with some of the top issuers. I look at growth as a series of tests. Again, looking for the data, what's working. We'll do more of that. What should they test out towards their growth or to the success of their capital raise?
So, even before testing, I think that putting together, like, when you launch, if you're going down this path, putting together the right team, sort of thinking through, like, okay, who do I want to help me do this? And we've mentioned, we've mentioned WeFunders and Start Engines and Republics, the sort of the platforms, but there's also a number of broker dealers out there that'll say, hey, we'll actually do this launch. We can help you avoid the noise at those platforms. If you have a very concentrated group that you're going to go after and you don't think you need that sort of spillover. So, how do you want to launch this? Are you going to launch it through a platform, through a broker dealer? Having the right, making sure your accountant's on board and has done something like this before, and your auditor. So if you're going that route, so it's not wasting time trying to educate them. And then, as well as your attorneys, there's lots of, there's a number of us out there who specialize in this space and can help you. And then, most important, maybe not most importantly, but right up there is just the marketing plan. Having somebody like DNA, or having somebody, and somebody who can help you design, like, how are we going to optimize this? How are we going to identify who we want to reach and how we're going to do that. Um, Helping you put together that plan from the beginning of, okay, you know, founders, people here in the company, who are we going to reach out to? How are we going to market this ourselves? How are we going to get that initial 1,000 investors into this offering? One of the things we didn't talk about, but another spot where you have seen success and where there's this sort of dual purpose of this is it really can become a great advertising if you are product based or you're a retail based company, or if you're just, trying to get your name out there. Um, Doing a reg, especially like a Reg CF offering, can really allow you to um, build that, not only sell product, but build brand recognition. You can even do that through Reg A. A lot of times, you'll because you can advertise, you'll hear Regulation A offerings conducted on, I've heard them over the radio and podcasts. And that, helps to develop that brand recognition as well as trying to raise capital for your company. So you can, going back to what I was initially talking about, to optimize what you're doing. Are you doing a product launch? Are you doing a sale? Are you doing something that promotes your product or your company, um, your business, that you can couple with this crowdfunding raise, so that you can increase that awareness as well. Um, in order to, and then I think you test that by not only just seeing the success you have, but testing against real metrics. Understanding, what are we really capable of? What is the size of the audience we're trying to reach? And what is the best way for us to do that? Have we maximized that potential, or is there other things we can do there?
I want to echo that, really determining the size of the audience, who we're bringing over, average metrics, whether it's a piece of content or an ad for how many people are going to click over, or percentages for conversion. You build that type of algorithm, you could identify key drivers quicker, as well as focus where you need to improve things, where traffic's falling off if you're seeing them not get to the finish line. And I like how you talked about brand recognition. I like how you talked about initiatives outside of the capital and how this can deliver those growth benchmarks. I threw some numbers out earlier. If it's 50,000 visits to an offering page, that may be 2.5 million impressions of an
Yeah.
advertisement or a piece of content. And maybe not all of those individuals, all those targets are really going to respond to the investment opportunity, but maybe around the product, even
Hmm.
B2B, and following what you're doing.
Sure.
I've had founders we work with tell me, hey, the capital was great, but let me tell you about some of these other conversations that got
Hmm.
sparked from the advertising, and listen to these government contracts work. I'm listening to what we're doing on the B2B side. I had mentioned earlier franchise inquiries and
Yeah.
M&A and all different types of discussions that could come out of this marketing and from these investomers who can be investing or not, but definitely plan for ones that invest and also become customers, clients, ambassadors, sharing what you're doing. Again, I see it on the B2B side all the time with people who are just thrilled with what an organization's doing, who's talking about them in the media, who's talking about the problem, always trying to phrase these different things to point at as marketers. And you started talking about optimization a little bit and how this is actually a way to optimize. I like asking the question beyond that as well of, what do you do if a campaign's coming out of the gate a little slow? It's not hitting its goals. I could give, the marketing answers, but do you ever go back to the drawing board of, hey, we're going to do an extension, or we're going to make these, material changes and have to resubmit, or, what pieces of advice do you give for a founder who is, seeing
So
performance, but not to the levels they want?
and sometimes people will go out and they'll try to like sweeten the deal, right? The you obviously can extend an offering, and that's not overly complicated. You have to be careful with that though. You don't want to, and this kind of goes back to earlier in the conversation, but just setting those initial terms. We just literally yesterday I was working on a CF and got comments back from um, the issuer, and they want it to be open for a year. They're like, why wouldn't we just keep this open for a year? And I could say, well, yeah, that makes sense. You could keep it open for a year and raise capital, but you're going to see this and it just nothing will happen. And that's kind of the life cycle, right? You see an initial bump, you see a drop, and then as it's ending, people will maybe buy again. So typically that's how they work. And so if you have a longer period, so a lot of times just extending, if there isn't that push, it's not going to do much. You might be able to bring in a few extra dollars, but it's not going to create any sort of urgency that that will help optimize the offering. We have seen it where people have gone out and they these become sort of marketing pieces where they'll they'll change their video, or maybe they'll change their offering page to make it more clear. Sometimes they'll do additional perks. And sometimes they'll change the price and say, listen, we had this on a Reg A where people went out and they just said, we're just not selling it. We're going to try to sell it for a little bit less. We're going to lower the price. But again, that complicates things as well. So it's from a legal perspective, if something's not doing well out of the gates, there's not like a ton of like tools where we can say, okay, well, let's just try this. Let's do this. It goes back to my first statement. This ultimately is a marketing play, and you've got to think, okay, how do we reach more people? There have been times where the terms are onerous. The terms are really in favor of the company, right? It's just the valuation's way off, or they're just not, they're basically saying, hey, they should be thrilled to invest with us. And so we're giving them the opportunity. And unfortunately, people don't view it like that. So, so we have kind of gone back to the drawing board, but generally I try to, from the very beginning, try to advise my clients to do everything they can to be successful. And if that means changing terms, try to do it at the beginning. So,
Right. I've seen groups get very strategic with share price increases and different perks, early bird bonuses, things along those lines.
Bonus shares. Yeah, that's something that we've done a lot, right? So if you invest X amount, then you get bonus shares. Or if you're part of the first 100 investors, you get, a 50% increase or something. So we've seen some really sweet deals on that, but sometimes that can also backfire as well. So I think it's I wish there was like a silver bullet and say, just do this and it'll be a success. So it's you look at what has been successful, and it's this combination of so many different factors that have all come together to make it work. I mean, it's the product, it's the company, it's the team, it's the timing, it's the marketing, it's the platform. It's all of those things coming together perfectly.
Yes, I'm telling that to groups on a daily basis of, hey, there's no magic bullet. It's not that black and white. There is a formula, but there's still variance, and you really need the results to show you what's working and where to make data-driven decisions to determine what to put time into next. Different types of content, different traffic sources, different channels, and that close tie to the analytics, and not expecting to crack the code in the first month. Many campaigns do, but I've worked on more that really matured, midway later in the campaign. We're always trying to figure out a way to get excitement when that dip occurs that you were showing, and how some Regulation A plus campaigns do with the share price increases and the big endorsements during that period of time. You're almost planning for the dip, so you're able to see more spikes, dips to follow. But
Yeah.
I think that's
Or
part of why these
product
conversations.
launches.
Yeah.
Sometimes like, right, they'll say, okay, we're going to do this. We're going to have a new product launch at this time and issue a press release so that we can hope we can survive sort of that dip.
Mhm.
So yeah,
Yeah.
those are things that we can.
And I think that's part of why these conversations are so valuable. Where if I'm a founder doing a Reg CF for the first time, or maybe I've done a few Reg CFs, about to go to Regulation A plus, the big stage, uh, I don't have the time. I don't have the monetary resources to, really extend the learnings. If I'm able to
Yeah.
take a few things from your expertise and implement them into my campaign, it could be the difference of success and failure. So I think that's a very good way to look at it. You got to really, stay in tune with the data. There's not just one magic bullet. Uh, any other tips? Any other success stories in terms of how groups are able to scale, hit the full limit? Anything you ever share from some of the top campaigns you've worked on?
Like I said, I think that this groups that have been the most successful are the ones that they're organized from the beginning. But they're also willing to adapt, but they have a plan, right? We worked on some really novel offerings, and those have been fun. But one of the most novel is just they had thought through sort of every step. And it wasn't because we're doing this cool thing, because we're so cool, because we're a cool company, we know we'll be a success. It was like, because of all these things, we're going to figure out how we're going to be a success. We're going to get ahead of every, we're going to get ahead of it. They had really good test the water campaigns so that, when we were going through the qualification process on a Reg A, these people were communicating to potential investors. They were getting people to make indications of interest. They were building this buzz so that when they did launch, which this was unfortunately one of those that dragged on forever because it was so novel, the SEC just had lots of questions. But when they did launch, there was this built up, excitement about it. And they did such a good job at just marketing all along the way. Now, this group didn't have like a huge budget. They didn't have a massive marketing team, but they were really good at getting the word out and communicating with people so that they were kind of keeping me in the loop and letting them know. So there was always this buzz about it. So having that sort of plan, like how do we build up the buzz before? How do we keep it going after? And this was one, it was a series LLC Reg A that they just kind of kept adding to it. And the more they added, the name, and then they raised money and they were able to start advertising and have, been one of the more successful issuers out there. So
Exciting to be a part of, right?
yeah, for sure.
I on the marketing side, front lines of performance. When a campaign's not working, we quickly have to come to the table with different ideas of channels, and within those channels, audiences, creatives, and funnels to test out. And when we're able to find the right combination, see it working, encourage founders to scale, hit those milestones. We've worked with some groups on over 6 rounds. Others were on their third round, second round with now, and I watched their teams grow, their offices, their product evolve, valuations, of course. Hear positive responses from investors, and we'll see some of the reposts and things that are occurring. So when it's all working, I mean, these are powerful tools, but it is a matter of watching it closely and having the right experts advising on it. If not working with you directly, uh, if someone wanted to get in touch with you to learn more, get some insights, where are the best places for them to go? And as we begin to wrap up, I mean, I feel like that was a mic drop moment that you had there, but any final last statements you want to add in?
Yeah. So the best way to get a hold of me is just email is mtate@kba.law, or you can find me on LinkedIn, just Marty Tate. Um, and I am on X and other social media, but I'm not super active on that. So And yeah, I think that it's, you know, we're, we're a decade into this almost, and, um, but I, I feel this sort of, there's still a level of excitement. One of the cool things is, um, there are those of us that have been around for the whole time. I mean, like you said, Jason, I think I met you at one of those conferences in LA, the crowd invest or what summits, whatever what those were. That was 8 years ago, and so there are those of us that are still involved, but the industry continues to grow, and it continues to evolve. There's change in administrations, come change in people of the SEC. We're seeing people that are really pushing to, you know, move things forward in a lot of different ways. So I'm excited to see how those changes affect things. I'm, you know, admission. I like rules and regulations because it helps me to know how to advise people.
Yes.
But we do need to evolve, and so hopefully we'll see that. Um, I wasn't a big fan of we talked about the sort of the ICO boom because people were just doing whatever they wanted, and people would say, "Well, how are they doing?" I'm like, I don't know. They doesn't seem like they're obeying the law. So, um, but I do think there's some really cool things coming, and just yeah, I continue to be excited to be part of this space.
Absolutely. It is crazy. It's been, 5, 10 years for many of us at this point. I remember speaking on the core summits and some of the different
Mhm.
digital productions there as well. And I know you're going to be, at the head of the conversation as the rules evolve, limits for how much can be raised, a more streamlined process on the
Yeah,
administrative side for smaller businesses. When that mainstream media cycle hits around investor success stories. So I'll be excited to check in with you, see your
yeah,
notes as you're running more and more of these successful campaigns. I want to thank you so much for taking the time to do this and put this educational piece out there. And definitely encourage the audience, take Marty up on that offer, shoot him an email, reach out, tell them what you're working on, see if there's any ways to collaborate. It could be the difference of setting your campaign up for success or just getting something live and being one of those groups that's stuck under 100K and losing time and money along the way. So, Marty,
yeah,
thanks again. Really appreciate this.
yeah.
It's been awesome.
Awesome. No, thanks, Jason. Appreciate it.
And thank you, everybody. We appreciate you tuning in. We'll see you next time. Take care.